A new investment opportunity from Centuria NZ is out now. The Centuria NZ Healthcare Property Fund provides exposure to the sought-after healthcare real estate sector, with a minimum investment of only $10,000. Foundation investors will receive an after-tax 5% per annum forecast cash distribution paid monthly, along with the potential for capital growth. The fund's initial acquisition will be a portfolio of 23 aged care properties across New Zealand, providing diversification by location, along with exposure to this attractive sector. With all of the assets featuring initial 30-year triple net lease terms, with built-in annual growth to leading operator Heritage Life Care, this investment offers a long-term, stable income stream. Mark Francis is a director of Centuria NZ Healthcare Property Fund and the CEO of Centuria NZ, formerly known as Augusta, who will manage the fund and the properties.
I formed Augusta 20 years ago to provide New Zealanders access to quality commercial and industrial property. Over that time, we grew to be one of the country's leading and largest property fund managers. In 2020, the opportunity came about to merge with one of Australia's largest property fund managers, the ASX 200 listed Centuria Capital Group. Now known as Centuria NZ, we're part of a leading Australasian property fund management platform with around 20 billion Australian dollars of trans-Tasman assets currently under management. We continue to look after thousands of wide-ranging investors, including those who invest the minimum, through to those with many millions of dollars invested across multiple offerings. We're conservative in our approach, with a focus on quality assets with strong long-term fundamentals. At the core of our investment philosophy is providing sustainable monthly returns and protecting and growing investors' equity. The Centuria NZ Healthcare Property Fund's attributes strongly align with this approach.
The 23 aged care properties that the fund will initially acquire have a total valuation of $194.9 million. They're all tenanted by Heritage Life Care, who in Centuria's opinion are one of New Zealand's leading and largest aged care operators. They have strong financial standing, and Centuria NZ understands that they'll have total net assets in excess of approximately $100 million following the settlement.
All of the properties benefit from a sought-after 30-year initial lease term to this quality tenant, with rights of renewal totalling a further 60 years, taking the final expiry through to the year 2112. Importantly, the leases are structured as triple net. What this means is that Centuria NZ Healthcare Property Fund, as the landlord, is insulated from all liability in relation to the property to the maximum extent permitted by law. For example, any costs of capital expenditure, repairs and maintenance, and other works, whether structural or otherwise, are not the fund's responsibility.
The lease stipulates the tenant is responsible and has the same liabilities in regards to the premises as if the tenant was the owner. This is widely considered the most landlord-friendly form of lease.
Another major benefit to investors is that the leases feature annual rent reviews that reflect movements in CPI, the Consumer Price Index, providing built-in rental growth, increasing rental income annually for the next 30 years, and providing a degree of offset against inflation pressures and potential interest rate rises. Further security is provided through a bank guarantee of 6 months' rent. The leases don't provide for abatement of rent under any circumstances, including in the case of restricted access due to COVID-19, providing further certainty of income.
Another key feature of this portfolio is the geographic diversification it provides. Approximately 52% of the value is weighted towards Auckland, Christchurch, Rotorua and Dunedin, with the remaining properties located regionally, catering to local demand where future bed shortages are forecast to emerge.
A key factor within the aged care industry in New Zealand are the government-mandated care fees and the supportive funding environment. It provides for high levels of recurring government funding, estimated at around 53% directly from the government, and in addition, roughly 24% funded indirectly via residents' pensions. It's the intention of Centuria NZ Healthcare to grow over time, to continue to increase investors' exposure to a variety of healthcare real estate. All future investments by Centuria NZ Healthcare will be strategically selected for their ability to continue to increase diversification within the healthcare real estate sector and to contribute to the yield and capital growth of Centuria NZ Healthcare. Examples of future acquisitions could include private hospitals, medical centres and GP surgeries.
Cameron Bagri is a leading economist with over 20 years' experience. For over 11 years, he was the chief economist at ANZ Bank,
In the current economic environment, investments that are linked to long-term structural trends, such as population ageing, have the ability to outperform the wider economy and are expected therefore to be in strong demand. Household consumption will shift as the population ages. Sectors that might increase their share of the economy are health, including aged care, financial services, and parts of retail trade as people start to spend in retirement some of their accumulated savings. New Zealand's rapidly ageing population is highlighted when we consider the over 85 age bracket, which is forecast to rise from 88,000 people in 2020 to 360,000 in 2063, an increase of a whopping 309%. This growth directly corresponds with the average age of entry into aged care beds in New Zealand. Increased demand along with constrained supply is forecast in the aged care industry, with a shortfall in care beds expected to emerge from 2026 given current build rates. Anecdotally, this is already occurring in specialist care areas. The healthcare and social services sector has outperformed the general economy over the past 30 years. Healthcare performance, including aged care, benefits from the fact that health expenditure is often essential for maintaining well-being and a certain comfort in life. The economy itself is not the key driver. This is different from many other sectors which can be relatively more sensitive to factors such as consumer or business sentiment, economic activity and interest rates. This means healthcare, including aged care, presents beneficial non-cyclical and defensive characteristics.
Centuria NZ Healthcare's pie structure provides taxation benefits. In mid-2020, tax deductions for depreciation of commercial and industrial buildings were reinstated, which is a further benefit for investors. Due primarily to these depreciation deductions, Centuria NZ expects there will be no New Zealand income tax payable for the financial periods ending 31 March 2023 and 31 March 2024. This means that on an after-tax basis, investors will receive the full 5% per annum forecast cash distribution, regardless of their personal tax position. Centuria NZ understand the importance of cash flow to their investors, so these distributions are paid monthly. There is also the potential for capital growth. One of the most frequently asked questions is regarding liquidity. Specifically, can an investor sell their investment?
So the answer is absolutely yes. As the manager, we operate a secondary market facility, and that matches the buyers and sellers of shares. The liquidity of a share is very much related to the performance of the underlying asset, including the remaining lease term. Since 2014, Centuria NZ has facilitated secondary sale transactions with a total sales value of over $47 million. We believe that Centuria NZ Healthcare Property Fund's initial acquisitions provide a sought-after institutional-grade investment opportunity within the healthcare real estate sector. Investments of this calibre with an attractive tenant covenant, 30-year triple net lease with stable income, geographically diverse portfolio and inflation-linked growth are difficult to find in the current market. We expect very strong interest from investors and we recommend your earliest attention to this investment opportunity. We also remind you that there is the option to apply online by visiting the website on screen now.
For more information, including a copy of the product disclosure statement, please contact Mike Hawker, Samara Phillips, Sarah Preble, Shirley Leung, or Steve Rendell from the Soul Selling Agents, Bailey's Real Estate.